Let's go to a panel and discuss crypto markets for a bit, which have shown very sort of trends that nobody is really even able to pinpoint on what is happening and why exactly is that taking place. Joining us now is Siddharth Sogani, CEO of Cribago Global. Hi Siddharth, welcome to CC. Also we have with us Pranav Sharma, founding partner at Woodstock Fund. Also with us Saurav Sharma, partner at Jump Capital. Siddharth, let me begin with you. Could you just explain this to our viewers first? What exactly is this crypto winter, crypto freeze that seems to be the trend word these days? What exactly does it mean?
Hi, Sonal. So, yeah, I mean, crypto in the last 10, 12 years of the crypto markets, we have seen that the market goes up, catches a trend, and corrects very steeply. And once it gets into that correction mode, it goes sideways for a while and comes back again. Fundamentally, for Bitcoin, there are reasons which are the network hash rate, network difficulty levels, and also the block halving. Every 4 years, there is a block halving where the block reward of Bitcoin goes into half. So it started from 50, then it went to 25, then 12.5, and so on. So whenever there is a block halving, just a few months before that, we observed that in anticipation of price rise, we come out of that sideways movement and we get into a much market, a bigger market with new money entering. And
so,
when
in
the
your
new
opinion,
money enters,
are we in a crypto winter right now?
Well, this cycle is different. Here, I mean, till 2017, there was a crash in 2018, and we didn't see any excitement after the crash happened. But now this cycle is different because a lot of new and institutional money has come in. So we are going sideways. Of course, this has now the problem is, since the new institutional money has come in, the interest rate directly impacts the price action. So it's even though fundamentally it's a debt-free instrument, but due to the interest rate changes, which Mr. Powell was a little hawkish this time, but he didn't do anything. But it does impact the entire price action, right? So right now we are technically in a winter, we are in a sideways market, but this won't last long because right now is the time for relevance of this of the crypto, since it's a debt-free instrument and a non-correlated asset. We are expected to come out of it much sooner.
All right, so that's what Siddharth feels. Pranav, what about you? Winter's coming has been there for a while now, but is it truly here, and how long is it supposed to stay?
So I think first of all, thank you, Sonal. And I think winter is coming is something which was made famous by Game of Thrones. So it's very much something that crypto fraternity sort of loves this statement.
Yeah.
Definitely winter is not yet there, and this time it is different. I think a lot of these action happened because of the Fed anticipation of the Fed interest rate hike, which did not come through. So it also creates a little bit of overhang. It definitely led to various other markets correcting, equity markets globally, and definitely it had a fallout. So I think one key point I want to make here is that from a macro standpoint, crypto markets or Bitcoin is not decoupled from the other markets yet, but there'll be a point at which so there'll be a point at which Bitcoin will be decoupled. People are saying that a lot of this liquidity which is out there in the market, which at least in my opinion, doesn't seem like the Fed would have even enough firepower to go for more than 50 basis points of hike in any scenario. But in case that goes much more beyond, then there could be a scenario wherein there could be much more, I would say, correction in the markets.
This observation, Pranav, that you're making is something that I've been sort of thinking about as well, and sort of weighing on that. When you actually see how equity markets, stocks, etc., across the world have been sort of following the same trend, the trajectory seems to be pretty much the same, which is not something that we had seen with crypto earlier. So is that, I mean, how are we to analyze that? What does it tell us about crypto markets and how people are trading?
Yeah, so well, first of all, thank you for having me as well. So I think the general, I would say 3 or 4 core factors which kind of drive this, and we are starting to see definitely a lot more coupling towards the core markets, right? I mean, as as Siddharth mentioned, earlier, Bitcoin was the primary asset. And so, the 4-year mythical cycle, the hash rate was a big driver for these kind of cycles. Then there are sort of very crypto-specific nuances of, people, very small folks who are in the market control a lot of positions, leverage long positions. And when you take those positions, when the liquidations happen, it really escalates things. But I think now it's significantly more coupled to the macro economic aspects.
Right.
One of the reasons it is, one of the reasons is because the institutional money has significantly grown in the market, right? So if a lot more institutional money comes to the market, then as some kind of macro hawkish events happens, like Fed rates or Russia thing, everyone moves to safe haven assets, and then hence same institutional people are now moving their funds, all the funds, no matter what asset class they're put in. If there's high risk equities or high risk crypto, they will move it away, and that will cause the bear market. So I think the coupling of that thing is happening more because as more institutions come to the market, their basically actions when something negative happens on a macro perspective impacts the crypto market as well. And you're going to see more and more of that. It is still inflation hedged asset on a crypto, on a Bitcoin perspective, but earlier it had nothing to do with that. I mean, it was very small institutional market, mostly retail driven, who didn't care about macro. Yeah, I think the fourth is generally, I think, in a sense, like the linkage of the nuances where we are seeing less and less reliance on Bitcoin, right? So the Bitcoin hash rate used to be the big driver, but now Ethereum and a bunch of other assets are now significantly bigger as well. And so you're not reliant on the Bitcoin's mythical 4-year hashing rate as well. So I think all those things are now kind of, mashing together to be able to have pretty different impacts. And I think we can see some interesting models in the future.
All right. So what I'm gathering from everybody here is that winter is here. It might not be a long one, however, is what they're saying. But watch this space to know more about what exactly is happening in the crypto world. Thank you all for joining us in this week's episode of Coffee and Crypto. That's all we could pack in today's edition. Take care. See you next week. Bye-bye.